Well, hello folks out there in YouTube land. Got a big show lined up for you. Let's get right on into it. All right, let's pull up that screen. A to the I to the T to the X. First quarter results. We're also going to talk about a path to profitability. So let's get into Aitx. All right, I just watched Steve Reinhardt's the CEO, give a little update. It was only a few minutes. He just kind of talked in generalities. He didn't get into a whole lot of specifics. Just sort of a, it was sort of like this.
Was it over when the Germans bombed Pearl Harbor? Hell no!
Germans? Forget it, he's rolling.
Yeah, not a whole lot of detail, but that's okay. He did talk about the path to profitability a little bit, and that they had put an article out, and not a lot of people had noticed it, but I noticed it, and I'm going to go over that with you. But first, I'm going to go over the first quarter numbers. We're going to talk about the financials and where they are and where they're headed. So let's take a look at that. All right, first we're going to take a look at their balance sheet and realize their end of year is February 28th. So what we're going to be looking at is their actual first quarter. This is a little different than most companies because their first quarter is March, April, and May. So we're not going to have those June numbers. And June's where they sold 85 units. So I was not expecting these numbers to be very strong because they didn't have a ton of sales. They had some sales, but it wasn't anything huge like June. So like I said, I was not over expecting, and that's pretty much how it went. As you can see, their balance sheet shows just under $1 million in cash, and previously they were at $4.6 million. So that's why I'd been holding off, because I knew they were going to have to raise money, because they're burning through about $1.5 million a month, somewhere in that neighborhood, anywhere from $1 to $1.5 million. So I was expecting this to be down, and of course it is. And that's, you know, it is what it is. Here you can see their revenues. It actually was lower than the year before, which is disappointing, but it's not shocking. But if you'll remember, they had a huge sale to one company and they bought the units out rather than subscription-based model. And you can buy two different ways with this company. If you buy the sales-based model, I believe the profit margin is around 50%. If you do the subscription-based where you're paying monthly, it's about 75%. So this company that had bought a large amount last year, they bought the regular sales way. So Aitx had a booming first quarter last year, so they did not match that this year. And as you can see, there was very little profitability there, even on the gross profit. And they lost $3.5 million, so they lost about $1.2 million per month. And if you go down to page 14 on this document, you can see something important here. Here's device rental units, activities, and their revenue was $239,000 versus $125,000. So they almost doubled their rental activities or the subscription-based model. And the direct sales were $145,000, whereas if you'll remember a year ago, they had over $400,000 in sales, and I think that was to one customer. So this number, the rental activities, is an important number. This is a number that really needs to go up, and I'm hoping with June, you know, we don't have the revenue numbers for June. I'd love to know what the total sales were for that month. We probably won't find that out till we get to the next quarter. But anyway, the subscription-based model is increasing nicely. That's almost 100%. And that interests me more than the direct sales because these will be recurring on a regular basis. All right, so now let's get into the path to profitability.
So you're telling me there's a chance? Yeah!
And they said RAD had confirmed they had presently have 114 RAD devices on back order. Says the company sees a high probability that it will close the current physical quarter on August 31st with over 300 units ordered during the period. And realize they sold, what, 85 in June? So if they did 300 in June, July, and August, that would be really strong. And I would expect a much different quarter financially than what we just saw. And here Mark Fulmer said, we talk about sales momentum. It's great to see it begin, but I feel we're barely scratching the surface given the extraordinary labor and wage challenges our dealers and clients are suffering from. And that's really a big part of Aitx and RAD, is that payrolls are skyrocketing. And that's a major amount of pressure onto operations managers and CEOs to do something about that. Because if you've ever run a company, you know the number one expense is almost always payroll. It's not necessarily your bank payment on your debt or all the other expenses. It's really your employees that are the most expensive. And that's just how it is. And right now we're in heavy inflation, and we're also dealing with payroll inflation. So all of those things are going to push people into this artificial intelligence security devices, in my opinion. And it's such a huge savings. You can save up to 90% of what payroll costs you. And I'm sure you understand, these devices can work 24/7. They're never going to call out sick. They're never going to ask for a raise. They're just going to work. So I think this is a very good sector, and I like where this company's headed. The financials are the thing that concerns me the most. So it's good to see them talking about a pathway to profitability. It's the first time I've ever heard them speak to this. And Mark Fulmer said, just a year ago, we celebrated every single unit sale. Today, the mean sales order volume is greater than 20 units per order. So that's really strong. He estimated that current projections create expectations of between 700 and 1,200 units committed and on order by the end of this fiscal year. That would be an average of anywhere from about 75 to 100 units. So that's pretty strong per month. Says the majority of our sales to date are through this quarter are with organizations that are first movers, leaders in their vertical markets. Says as we continue this strong upward momentum and level our SG&A, which is sales, general, and administrative expenses, is what he's talking about. We have a likelihood of profitability during our next fiscal year, said Steve Reinhardt, once we get in the range of 1,000 to 1,400 deployed units, generating a stream of revenue, and that's that subscription-based. We expect to see an operational cash flow break even, depending on the product mix. And realize he's talking about cash flow there. That would not include depreciation, amortization, or any stock-based compensation or any of that crap. And then importantly, he's talking about expenses here. It says the company added that moving forward, SG&A expenses are expected to grow only in support of future demand. So they've already built their team, and so we kind of know now where their top-end expenses are until they add more revenue on top of that. So I'm thinking, based on what we just saw there, that they're going to be spending, 1.5 to 2 million a month in that neighborhood, and it shouldn't get a whole lot higher than that. And as you know, he told us the other day that they're going to sell 1 billion shares, so they will be diluting the company by about 16%, I believe was his number. And so this number of 5 billion authorized shares is going to go to 6. And these outstanding shares is going to increase because they're going to be selling those shares. Look, they have to sell those shares. They've got to raise money. They've got less than $1 million sitting there on their balance sheet.
$1 million.
So realize those billion shares could raise right now around $13 million, which I think would be more than enough to get them through the next 12 months. That's even if they just continue down the path they're on, which obviously they're selling a lot more units. So that may last 2 years. And that's what he expects, and he's probably correct on that. And the stock price, we're sitting at about 1.3 cents right now, and it's sitting in this little corridor, the low end of 1 cent up to 1.5, and it's been in this 1.3-ish area a lot, kind of just sitting in here, kind of bouncing up and down. And it's probably going to stay in this corridor for a little while until we get some really good news on sales, which June was pretty strong. But also realize we've got interest rates going up at an alarming rate, which they have to because of inflation, because of gas prices, and all of the terrible inflation we're dealing with. This is really hard on the market. It's super hard on small penny stocks and micro caps because, again, you're paying for future profits. This company's not going to show a profit for at least 2 years based on what I can tell. So that profit's worth quite a bit less, probably 15% less than it would be today. So when you're buying the future, that share price that you're paying right now needs to have that taken into consideration. We're not dealing with 2% inflation now. We're dealing with 7, 8, 9, 10. So until interest rates top off, which I think they will by the end of the year, I think they'll stop raising at that point. And I think the market will start rebounding at that point when they start easing and start saying things like, okay, we're not raising anymore. I think you'll see an improvement there. Also, look, election years are tough, and the closer you get to election, it gets people upset and a little bit riled, because realize uncertainty is never good for the market. And right now, we don't know who's going to be in charge. I mean, we know who the president's going to be, but we don't know who's going to be in charge of the House and the Senate until we get to November 8th, I think it is. So until we know that, there's going to be a little disturbance there too. But where I see this company looking good for me, as you know, I've been talking about buying this stock. I used to own it a couple different times, but I been out of shape over the Series F shares. So I'm still looking to re-enter. I just want to enter at the right point in time. I'm a little bit less concerned about the price than I am the point in time. And it looks to me like their second quarter is probably going to be strong, and it's probably going to compare really well year over year. So I wouldn't mind picking up somewhere prior to that. But, we're 90 days until we see the next quarter. So it'll probably be towards the end of that. That'll also get us closer to the end of the interest rates going up. And that's when I'll probably start going heavier into the market as well, because at some point, like I said, I'm dollar cost averaging all the way through, but before I start a position, especially with a penny micro cap right now, I'm going to make sure it's the best time to do that for me. But, that's me. You can do what you want. It's your money. I'm just telling you my thoughts and my opinion. And just lastly, the shorts, sitting around 34%, bouncing around between 20 and 30%, which is not horrible for a penny stock. When you start getting up around 50%, that's when they really start manipulating the crap out of the stock. Right now, they're just kind of playing with it. All right, folks, and that's Aitx today. Like I said, I just wanted to go over those first quarter results and then talk about the path to profitability. So, like I said, it feels like things are starting to look up a little bit, but we're going through such a tough time right now. It's really tough for penny stocks to even get noticed. Everybody's kind of bailed. But I keep my eye on this one, and I root for this company, and I hope that it works out good for them. And at some point, I'll pull the trigger when I watch these sales and they get to where I'm comfortable with them. And if you like this content, be sure to hit that like button. Lets me know to continue to cover Aitx. And if you haven't subscribed, hit that subscribe button. I'd appreciate it. And we'll see you next time on Mr. Frugal Investor.